the biggest industries that hasn't really been fundamentally changed by technology. Now that I know everybody uses online banking, ATMs, obviously all the computer records are kept online, but banking is still this industry in which you have these central institutions, banks, that are responsible for keeping everybody's records, keeping everybody's property, and you kind of have to go through that bank for everything. It hasn't been decentralized in the way that the media industry has, in the way that communications industry has. And so Silicon Valley, I think, particularly after the financial crisis, looked at Bitcoin and said, here's a way you can hold money, you can move money around, you can actually create money. Maybe this is our Silicon Valley's opportunity to finally move in on all this Wall Street business that has kind of eluded us for so long. And I think this was part of a broader thinking in Silicon Valley about finance, and we've seen a lot of these developments. The asset managers like Wealthfront and Betterment that have tried to take some of that business that Wall Street has kept for so long. Venmo, the lending clubs of the world that are trying to decentralize lending. Bitcoin in some ways offered an even more revolutionary solution, even if it was at the time a much smaller thing and still viewed as this sort of token for online drug sales. And so that struggle between the kind of anarchist libertarians, Ross Ulbrichts of the world who were into Silk Road, and the Silicon Valley venture capitalists who were pushing this as this new technology has dominated a lot of the last 2 or 3 years. And into that dialogue, there's been this constant issue of these crises and scandals that have hit Bitcoin. I think the biggest one of these was the collapse of Mt. Gox, which was the largest Bitcoin exchange in the world. It was based in Tokyo. And when it went down last year, it had about $500 million worth of its customers' Bitcoins. And remarkably, we still don't know if those Bitcoins were stolen or lost. Remember, if you lose this private key in Bitcoin, you've lost access to the Bitcoins in that address. This isn't a bank. You can't go and recover your private key. You lose it, it's gone. And that has happened several times over the course of Bitcoin's history, that people have lost private keys worth literally millions of dollars. There's many fun, sad, scary stories floating around about the guy in the UK who threw out an old hard drive and with something like, he realized later, $8 million worth of Bitcoins on him, and he went to the dump and was sort of digging through it furiously trying to find this hard drive. There are a remarkable number of similar stories. People who during the early years collected Bitcoins, and as the price went up, tried to recover them and were unable to. So this story of Silicon Valley getting into this and selling this idea has been crucial at, among other things, pushing the price of Bitcoin up. As people have gotten excited about this idea, they have purchased Bitcoins on the bet that Bitcoins will, in the future, be useful and be worth more than they are today. And there have been a lot of ways in which they've been sold, but that's been key in sort of driving these big price moves in Bitcoin that everybody has seen. Now, again, the sort of Mt. Goxes of the world and the scandals that have hit this have raised this question about basically oversight and security in a decentralized world. You'll remember I talked at the beginning that this is a network that's run by all the people who are using it. Their computers are sort of backing it up and supporting it. And you don't have a central authority to say, this guy is a thief, we need to close down his account. This guy is a hacker, we need to not grant him access. Anybody can have access to this. Anybody can run an exchange. Anybody can run a business. And obviously the danger that comes with that is that you get a lot of dark and shady characters, and sometimes just incompetent characters who enter and who cause a lot of damage. And so, $500 million worth of Bitcoins lost last year by Mt. Gox. I talked with Argentine pensioners who'd put all their money into Bitcoin hoping it would hold its value better than the Argentine peso. And they kept it with Mt. Gox, and in the course of a day, they went from having retirement savings to having no retirement savings. So that's something you kind of have to think about when you have decentralized technology like this. That, of course, has led, I think, into the latest phase of Bitcoin, which is the regulators and the banks moving in. And on the regulatory side, the biggest name here has been Ben Lawsky, who's the top financial cop in New York, who actually just recently announced that he was stepping down from the Department of Financial Services in New York and moving on, I think, to his own consulting firm. But he has led the push to essentially create new rules for this technology. And it's interesting because if you remember back to the beginning, what gave rise to this was this desire to find an alternative to the current sort of government-sponsored financial system, or with central banks given the power to create money, and create an alternative to Wall Street. And what you have more recently is that so much of the development has actually been driven by government and Wall Street. And Lawsky has, the sort of center of his push has been to create this thing called the bit license, which is a new kind of sort of money transmitting license for Bitcoin firms that recognizes the kind of upstart nature of this. It's been interesting to watch after, going back to the Silk Road, after the head of the Silk Road, Ross Ulbricht, was arrested in October 2013, there was Senate hearings at which really the first kind of federal conversation about Bitcoin, and people weren't sure if the law enforcement and regulators were going to get up and say, this thing is just trouble, and we need to do anything we can to outlaw it. Instead, a few weeks after Ross got arrested, the DOJ, Secret Service, got up and said, this is interesting technology that could have implications for the entire financial system. And yes, it can be used for misdeeds like the Silk Road, but it is potentially important technology. And so since then, you've had regulators looking at this, considering what kinds of rules need to be in place to prevent the sort of things like the collapse of Mt. Gox. Now, on the Wall Street front, I think I want to just go back to the beginning and talk about the different things that Bitcoin can be. I think a lot of the conversation is still about this idea of a kind of digital cash, perhaps digital gold, a place you can store your money online. One thing we didn't discuss, and that's sort of the next layer beneath the kind of email system that Bitcoin enables, is the ledger on which all of the Bitcoin transactions are stored. Now, every financial system relies on ledgers. Obviously, the bank keeps its ledgers of all of your accounts and what your balances are and what your transactions have been. The kind of revolutionary thing about Bitcoin, the way the ledger is kept within Bitcoin, is that it's not held and updated by one institution. It's updated by everybody in the system. So everybody has their own copy of the ledger of Bitcoin transactions that tells you how much each person owns and where the transactions occurred. And the idea is that if one person or one institution gets knocked out, their computer systems go down, that ledger of transactions is still there. And the power of the system comes in the number of people who are holding onto those records. Because if there are a lot of people holding onto the records and one person over here says, I grant myself 1,000 Bitcoins, everybody else says, no, we have the records, we can see, you don't have those 1,000 Bitcoins. And that's the kind of authority within the system. It is kept by this communally updated ledger. And just to give you a sense, this is one website, blockchain.info, on which you can look at this ledger and look at the transactions coming in. And just to give you a sense, this right here is the latest transactions. This was not right now. I think this was taken, I took this screenshot last week. But you can see, in the course of a minute, you had all of these transactions coming in. This one's for 4 Bitcoins. This one's for 11.6 Bitcoins. And you can click on any one of them. So this is one transaction. Go to it and see That's the Bitcoin address that the money came from. This is the 2 addresses it's going to, and this is how much was sent. And you can find any transaction in Bitcoin's history on this ledger. This is one website that makes it easily accessible, but anybody has access to that. And so this idea of a decentralized ledger in which you keep track of everything, which within Bitcoin is called the blockchain. But this is what a lot of people are talking about now, particularly on Wall Street. I think the Wall Street banks, as they've been looking at this, have been less interested in holding money within Bitcoin and more interested in the potential opened up by this ledger. What if, instead of Visa keeping track of all the credit card transactions, we had a decentralized system in which we could keep track of it, and we didn't have to pay Visa 20 cents for every transaction that was made? And so recently you've seen Goldman Sachs made its first venture capital investment in a Bitcoin company. JP Morgan has sort of outwardly been quite negative about this, talked about the opportunities for money laundering. Jamie Dimon, the CEO at JP Morgan, has been particularly critical of Bitcoin. But within JP Morgan, there's actually a 25-person Bitcoin working group composed of executives across the country, across the company, and across the world, from credit cards to settlement and clearing, talking about how they might use this to update their own systems. And actually just today I was reading as I was coming up here, Santander, the British bank, just put out its own report talking about how the blockchain and the decentralized ledger might save banks something like $20 billion a year by 2022 or something like that. Just because when this is the idea of the internet applied to money. You're taking this system that had these central authorities that charged tolls, and you're decentralizing that system and making it, opening it up to competition. We can talk more about the possibilities there, but that's what a lot of the conversation is around today, is the blockchain. Just finish up by saying, today, actually the price of Bitcoin oddly is spiking today. So it's gone from like $235 a Bitcoin to something like $250 a Bitcoin, I'm sure in anticipation of my talk here. And I think there's always these questions about, okay, is it settling down, or are people finally taking it seriously? I just close by noting that this is still an entirely sort of speculative realm. Aside from the Silk Road, there is currently no widespread use case of Bitcoin that people are currently making use of. There are banks talking about how they're going to use the blockchain to, change the stock market, but that's a long ways off. There are people talking about how they're going to use it for remittances, allow people to send money from the US to Mexico more cheaply. Within Argentina, a lot of people are playing with this because of how screwed up the economy is there, but it has not gained a real foothold in the mainstream. And the price of Bitcoin is really just a sort of speculative bet on how useful this thing is going to be in the future. And it's not clear. It's not clear how it's going to be used. Is it going to be the global reserve currency, as some people thought early on? Is it just going to be a way you can store money online, sort of like gold is if you want another asset? Is it going to be a new credit card network? Or is it going to be supplanted entirely by another similar currency that does all of these same things better? But that's still very much an open question. I think, though, that looking at the people, as I did, these first 5 years, and looking at what motivated people to sort of throw themselves into this, I think one of the amazing things that kind of motivated me to write this book was seeing how many people were drawn to this in an almost primal way. People who really did sort of leave their old jobs behind to chase the promise of this. And there's a gold rush element to it, kids just looking to get rich. But I think this idea of freeing money, making it, creating this money that you own yourself, it kind of tapped into something very deep in people. And I think that's still playing out, and you see this in every conversation. So let's, I want to take some questions from you guys, but hope that gives you a good place to start talking about this. Perhaps you'll have a slightly better sense the next time you hear this come up. But please, I'm happy to answer any questions you guys might have.